Good morning, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It is Friday morning, November 1, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. All three US stock indexes closed lower on Thursday after Microsoft and Meta platforms highlighted growing artificial intelligence costs that could hit their earnings, curbing enthusiasm for mega caps that have fueled the market rally this year. Stocks fell sharply on Thursday, with investors assessing earnings season for big technology companies with growing skepticism. Microsoft and Meta platforms reported better than expected results, but that wasn't enough to lift the stocks. Microsoft shares lost 6% after the software company forecast slower growth in its cloud business. Meta shares slid 4.1% after the Facebook owner said it expects significant growth in capital expenditures next year. The results weighed on broader markets and underscored how big tech companies are facing a tougher crowd this earnings season. Investors got more results on Thursday, with Apple and Amazon reporting after the closing bell. Among other so called Magnificent Seven mega cap technology companies, Amazon.com and Apple reported quarterly results after the market close. Amazon beat revenue estimates, boosted by strong growth in its cloud service unit. Apple also beat revenue and profit expectations as iPhone sales grew. Shares of Alphabet, which reported on Tuesday, fell 1.9%. Thursday's decline risk sent the S&P 500 to its first monthly loss in 5 months. The Dow Jones Industrial Average fell 378 points, 4.90% to 41,763. The S&P 500 lost 108 points, or 1.86% at 5,705, and the Nasdaq Composite dropped 512 points, or 2.76% to 18,095. Information technology led declines among sectors, but upbeat results from ConocoPhillips and Entergy lifted energy and utilities. An index of chip stocks fell 4%, led by a 17.4% plunge in monolithic power systems shares after the maker of power control products and semiconductors used in vehicles reported its results. Nvidia also dropped 4.7%. Estee Lauder posted its worst day on record, dropping 20.9% after the cosmetics company withdrew its 2025 annual forecast. Shares of Uber Technologies fell 9.3% after the ride hailing company forecast fourth quarter gross bookings below expectations. Intel reported earnings after the close that were weighed down by impairment and restructuring charges. Comcast shares rose 3.3% after the NBC owner reported higher quarterly sales and said it may spin off its cable networks. The VIX, Wall Street fear gauge, ticked up as investors brave for more volatility in the next few weeks from corporate results and the November 5 US presidential election, followed by the Fed's policy setting meeting. The personal consumption expenditure price index, the Federal Reserve's preferred inflation metric, rose 0.2% in September, in line with economics expectations. However, the core figure was 2.7% year over year, slightly above the 2.6% forecast, while consumer spending increased a little more than expected. Weekly US jobless claims fell more than expected, according to figures released on Thursday, indicating a robust employment market and less reason for the Federal Reserve to cut rates. Friday's non-farm payroll figures are expected to show 100,000 jobs added to the US economy in October. After the data, traders stuck to their target for a 25 basis point rate reduction in the Fed's November 6 to 7 meeting. As of late Monday, in commodities, West Texas Intermediate crude rose 1.9% to $70.60 a barrel. Spot gold was little changed. Key events for Friday: China cakes in manufacturing PMI and the US employment and ISM manufacturing figures to be released on Friday. That's it for today, folks. I will see you on Monday morning. Have a great weekend. In the meantime, do not forget to write in the comment section what are your thoughts for the market today. Happy investing, stay inspired, and remember, it is all about money.